Here we go. Before we get started, obviously, we're going to open up the trading room. That's it. The Bulls and the Bears. Oh my God, that was absolutely atrocious. Why did it stop in the middle? Anyway, guys, hope you're all well. It's me, Victor, and I today. Victor,
how are you doing, Alex? How is everything?
It is fine. It is fine. We've. I think have you been trading today? Have you been doing anything?
I have been watching, but I haven't had any setups. I am watchful for upcoming setups, of course, on GU and EU, but nothing yet. I'm still with my finger on the trigger. Nothing yet. How is everyone doing in the audience?
Yeah, let's. We'll wait for a couple of people just to get in. I know sometimes it takes a little bit of time. So tell us where you're from, what's going on, guys. If you're new here, if you come here all the time, people out here for the giveaway, don't worry, that will be later on. Make sure you stay. We've got Abe in the house. Look at all of this. Got some news coming out on CAD soon. I was actually in a CAD long, not a CAD long.
Where are you?
Pound CAD long.
Okay.
I just closed that out, and now I see that it is pushing up. But we got news coming out in around about 20 minutes. So I got out.
How was the trade? What did you?
Trade was good.
Manage to catch? Okay.
Yeah, it was a profitable trade. I'll pull it up here, and we can just quickly talk about the reasons why it was taken. So a couple of weeks back, we were doing our stream, but one of the streams, I don't know what's going on with the thing. I think we're both clicking on the same thing.
Oh, I'm sorry. Go ahead.
So we marked out these different areas and these arenas of support and resistance. And this kind of range that we've got here, obviously, we've had a nice push up above these candles, break of market structure, retest, and I was looking for the continuation. Here are the two support and resistance lines that I had from the other week. When I put all of these support and resistance lines, we didn't have this price action here. We had none of that price action. So we can see that they're very valid because we had a nice reaction from there. And unfortunately, I never took a trade on this because I don't normally trade this. But then the trade today was just a continuation setup. You can see, obviously, it's come back down. It's found this area of support. It's pushed up above the EMAs, made some very, 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 very nice wicks. And then I decided, okay, then I'm going to get into a trade here. Got in again as a retest of this, this area of support and resistance. And that was it. I got out of this trade here because we've got news coming out soon. Got a lot of stuff.
What was your target?
My target is that next level of support and resistance. That's my target.
Nice. Nice.
So that's what I'm going for, especially because if we're looking on the 4 hour, all that is just a break, retest, support, continuation. So it's very
nice,
super simple. And that's what we're doing. But we're gonna wait until the news to see if I'll get into a position or get an entry.
I bet everyone in the audience is very interested in getting like a breakdown of your strategy because it looks very, very nice. I mean, the way you entered, you almost didn't even have a drawdown difficulty, right? You didn't go into drawdown.
There was a little bit of drawdown here and there. Obviously, you've had got into this area, and you had a little bit of drawdown, but all of this was just solid
That's
support.
one.
Had a push up,
Yeah,
and we've had a
I
push
wouldn't
up.
even.
Yeah,
Yeah, I wouldn't even consider that drawdown because that was the
yeah,
range. You bought the range,
yeah,
and as long as in the range, I don't consider that stressful because as a trader,
yeah,
it can. You don't know when it's gonna break it out of that range, and
yeah.
it didn't go anywhere. It held nicely above the moving averages. So I think the a lot of viewers in the audience would be very eager to have a breakdown of how you entered, how you trade, what is
Yeah.
your how do you put together your setup.
One day we shall do that, Victor. But no, this is your day today with the Quasimodo, so I won't go too into it today. But obviously, you've seen that reaction from the 200 EMA right there and the 50 fib, and it's still pushing off there. The only reason I didn't enter back in is because we've got news in 20 minutes, which is the CPI on CAD. So that's why.
Yeah.
Have you had any trades or anything? That you've been trading, or because you've been sitting out waiting for signals, no?
Yes, I've been waiting for signals and I didn't get anything yet. I
Okay.
start on the H4, but when I'm very interested in the areas below. So we haven't got there in terms of macro targets, but
Yep.
starting on H4, I'm still leaving. We still need the market to make more structures here because we've been had a quite powerful move last couple of days, and I need a reading on. I need more data to see what is the intention. What is I can't get a read yet of the market because I would expect it for it. I'm cautious because I think it might retrace, but
Yeah.
it's not doing that. It's making lower lows and it's
Not
making
breaking.
lower highs as well. So the market structure is still telling us that it could continue to go down, and in that sense, I'm a bit cautious to see what is next. But yes, I'm very eager uh, to get my my foot in the market.
The only thing that I would say about this particular price action, the push
Hmm.
downs quite aggressive, but this last push down, there seems to get quite. They're getting shorter. They're getting tired.
Yes.
Prices now are not expensive. They're becoming cheaper, and people are realizing that this is not a place to keep selling, and that's why you got less selling pressure. That being said,
Yeah.
with everything going on in the world, then it could push. We don't know what's going on. The volatility is crazy at the moment. You don't know which way. So unless it breaks any structure, I haven't even touched. I want to go long. I want to go long on
Hmm.
euro, but unless it breaks any structure, I wouldn't be looking at it. But what is your plan for going long? What are you looking to go long?
Well, I'm still waiting for the market to make a. I haven't had that yet. We have been having since to this morning, since the start of London, we have been having bullish order flow, and that's a good sign. Like this could be the first leg in a structure. Not necessarily this be the bottom, but this could be like the beginning of the market showing us it wants to reverse. But
Yeah.
we're not there yet. We did break. We did have like a wedge, you could say, in terms of like a bottom, like that wedge that I
Mhm.
put in there. But the trend is still bearish, so I'm still on the sidelines in that terms. What I need to see is like clear sign from the H4 forming either a big wick or engulfing outside bars, those kind of things to tell me, okay, we are hitting some kind of bottom before I'm ready to put in start putting in some positions. But
Mhm.
I would assume that it wants to go a little bit lower before that happens. But we'll see. Whatever
Yeah.
structure the market shows, I'm gonna be in it as soon as I feel confident and it hits my it forms those setups that I need to get in.
Yeah, I think Victor, we're bad influences on Abe because Abe trades New York, and for a couple of weeks he's actually he's been taking trades in London because we're all trading all the time, and Abe is seeing the potential of trading London session. So That's nice to see. Well done.
Yeah,
Dave.
there's quite a split on in between traders if which one is better, if it's New York
Yeah.
or if is it
Mm.
London session. I
Mm.
personally I don't have
A bias.
I don't no, I don't have a bias. I would say whichever shows me those structures that I need, I will trade
Yeah.
them. So that can be London, that can be New York. I don't you know limit myself to one session. And since I'm a full-time trader, I have the luxury, you could say, to trade both of them.
Yeah. Amazing. Before we go into, because obviously Victor's going to be talking about his Quasimodo method, which the nuances in this technique you really don't want to miss, because I've also taken a couple of trades from these techniques and I've gotten some really nice entries. One of those entries was a euro trade just before this massive move down. We took it on a 1 minute in the live trading room. That was going off a very similar Quasimodo technique, double top, breach, retest, sell, continuation. That's super basic, but you're going to need this. Before we go into that, we're actually going to do a live withdrawal. So I'm going to talk about this account that we started trading the last couple of months through the live trading room. This is the 100K high stakes account. And we've been trading this pretty much 3 times, well, all the time, but 3 times a week live in the trading room. And you've basically seen us make a lot of different profits on here. So we're going to actually withdraw. I'm going to show you the process. So if you're new to the 5ers, you're going to see how fast it is, the full process of how we do withdrawals. And you're going to see straight away that the balance and the credit are going to go down, allowing me to continue trading as soon as I press the withdrawal button. A lot of firms will make you wait to continue trading after you made the withdrawal. We're going to make the withdrawal and you're going to see that it automatically takes it out of your account so you can continue trading as well. Now, we have got a surprise as well for people that are people that are already 5ers traders. They probably already know this, but we're now introducing the 5ers Visa card. It's a new payment method, a new payout method that we have just introduced, giving you the ability to have a virtual card. You can also have a physical card. We're going to go through that very soon, but let me just pull up my hub and we'll do the withdrawal now. Got to make sure that I'm okay. Perfect.
Pay attention, guys. This is the great moment, man. After you've put in all the hours,
I didn't take
have
any
you put in
profit.
exactly
Any profit since we started this. So this is the first time I'm withdrawing actually from this whole process. So we've got some nice profit. We've got a nice win rate as well, 45%, profit factor 1.5. Okay, that kind of hurts. Gross profit of 20K, gross loss of 13. That's disgusting.
It's good.
It's okay. What else can we learn from this? Average profit is around about 1,000. Average loss is around about 500. Expectancy 179. Average trade duration is about 1 hour 37, which is quite interesting actually. So I'm definitely a day trading type
of
whatever.
trader. Yeah.
Okay, so we're going to do a withdrawal here for people that have never done it. Okay, here you can see payout request, available withdrawal for this account, including credit and profits, 15,412. So 15,412. We'll leave the 26 in there. So the different types of payouts you've got for the 5ers, you've got bank transfer, Wise, crypto. You can get hub credits as well. So let's say you want to keep a little bit in there. You can just do, let's say, $500 and you can just do hub credits. It goes instantly into your account, 500 hub credits, so you can buy an account straight away if that's something that you wanted to do. It's the fastest way to build up a lot of accounts and to trade a lot of accounts and copy trade and so many different things. So that's also a strategy that you could use with your profits. But we're going to press on the prepaid virtual debit card. I'm just going to literally show my email. God, give me 2 seconds. Please do not
Sure.
email me, guys. Let me. So people have already seen it, but just please don't email me. I'm going to get people emailing my personal email right now. Great. Submitting the payment request cannot be reversed. You've got to do this. Requesting payout will be drawn from a trading account. Okay, you've got all of this stuff. You can have a look at that in your account. We're going to go submit payout request. Okay, there you go. Let me just have a look in.
This is the great moment. After so many hours, put in your strategy, all the stress you had to withstand. This is the moment, guys.
Okay.
The withdrawal moment.
There you go. Okay, let's have a look here. I'm not sure why it's not taking my credit out. Maybe let's have a look. So it's taken the credit. It's taken the balance out. I needed to take the credit. I'll have to see what's going on with that. But there you're going to see it's taking the funds out of there straight away. You can see that. Withdraw. And we're going to go into banks soon, which is the dashboard for the virtual credit card, and we'll see how long it takes to get in there.
This profit, how long did you take to achieve this profit, Alex?
How long have we been doing the live trading rooms now? 2 months, 3 months?
Okay.
I think around about that. As soon as we started doing the live trading rooms with Jonathan, that's where we did we started this.
But the 2 to 3 months, is that including the phases or only funded phase?
No, those including the phases. If you guys want to go back and see the phases and how it started, go back and you'll be able to see the full from phase 1 to phase 2 to funded, throughout funded, and then to the how would I say it? And then to the growth as well. So we had the growth there as well.
So how long did the fund, since you were funded, how long did it take you to achieve the 15,000 in profit? More or less, doesn't have to be precise. Is it 1 month since you started trading the funded, or is it?
Well, it's probably about 2 months, I think, or a month and a half.
A month and a half, okay. So 15,000 for a month and a half. Basically, that means about 10,000 per month.
Yeah. There you go.
Very nice, man. Congratulations.
Thank you very much. We're gonna go and let me just see if it's show the dashboard. So this is the dashboard that you're going to get if you're going to opt in for the 5ers Visa card. So here you go. You got the dashboard. The money isn't in my account just yet. I've got 97 euros in there. So here, basically, you see all your different cards. There are many different things you can do with this. So if you want to open up a new card, you can go to create a card. You can do as many different cards as you want. There's no limit. So if you want to open up a card for your husband, your wife, your children, as soon as you get profits, you can give them a little bit of pocket money. They'll be able to instantly spend that in any shop. You'll be able to spend that on Amazon, all of those different things. And you'll be able to manage it and transfer everything here. I'm just going to send the message to our team. And once they put the money in there, we'll be able to see it live in the account. And then you'll be able to do this as well. Wherever you want to go, see you've got your active cards. Let's say you've just got one card and this is for you. All you need to do is view card. And here you got all your transactions, literally like any other. It's actually a little bit faster than your normal bank. My bank, to go and do all of this, for some reason, it's still stuck in the 90s. But your bank, you'll be able to come in here, you'll be able to do the transactions, you'll be able to click this lovely button, which I'm not going to do because that will show the card. But you'll click this lovely button, it'll come up with all the details. You can just then go onto Amazon, go onto Apple, go on, pay your groceries, just put the number in and all of that good stuff as well. So you can do that, again, with many different cards. It's all in euro, so just keep that in mind. And there you go. They've already put it there. The 15,000 is all in my account. I can now use that card. I can even withdraw that. If you don't want to just keep it in there, you can withdraw it to your bank. But for traders that, let's say, I don't know, live in Africa or places where it's quite difficult with, they use a lot of crypto and stuff, this is a perfect way to actually use that. So there you go. Now we can go back and we can just continue trading the account as normal. And
just information for the traders. Is it possible to have a physical card as well if they want to pay in a store?
That's amazing. So you can pay in a store with Apple. Well, the Apple's on its way. You've got the touch. So let's say you go into a store, you've got Google Pay. Google Pay already works. At the moment, the Apple Pay is still in development. But you'd go onto your Google Pay and you just click it in store. Or
so basically you put the card in your phone.
You put the card on your phone, the virtual card on
exactly.
Google Pay, and soon to be Apple Pay. As soon as you've done that, then you'll be able to go into any shop, beep, as they do. But let's say we'll create a card. And you can do physical card. God, I'm literally doxing all of my information. I'm not going to fill this out. And it shows where I live. But you fill all of this out. You can fill in your company name. You can do whatever you want. You can pick your 4-digit PIN, confirm your PIN, 3D secure settings. There are tutorials to do this. You can put all of these details in. So let's say, when you got your normal bank, you pay for something and it needs to be verified. You can put the 3D secure verified on there. So you can just confirm a payment. I don't know if your children are using that particular card. You just want to confirm that they're using it for, not buying too many sweets and stuff. That's a perfect way of doing that. Then you can send your physical card to your address and use it wherever you want. And yeah, that's it. And then, when you withdraw your funds, it goes straight to the card. Straight away, you can use it for groceries and whatever you want.
This is great, man. I think it's a great help.
It's for posting option. Standard post is 7 to 12 days, and that's €5. Express post is £35 or €35. That's not our charge, by the way, guys. That is from the company, our payout partner. Yeah.
Nice. It's a great stuff. It gives you so much for everyone who doesn't have the same access for banking, right? Internet banking is not everywhere yet. Yeah. So this is great for everyone. Yeah.
Exactly. But there you go. And now we can let's have a look.
And I like that feature. You can, once you, as you mentioned, once the money is on that card and you have it on your phone, you got the money already. You can next minute you can you can go anywhere,
go shopping, go and get yourself some whatever you like to spoil yourself with. Go and get yourself a holiday. Go and get yourself a nice spa or a massage. For you, your girlfriend, your husband. If we're not, we trade for a reason. We trade to, it's a means to an end to get money.
Exactly.
If you're not using it, then there you go. But
well, it's very inspiring. Imagine when I see that amount, I imagine what. I want to ask in the audience, what would you do if you would be able to cash out on a withdrawal after a month and a half of trading, of work? What would you do with that kind of money? How would that affect your family, your quality of life? Maybe financial security for your family, right? 15,000 is a very, very nice amount. So this, guys, this is what it's all about. Of course, when I talk about in trading, I always say don't focus on the P&L, focus on the process. Yes, that's true. But in the end, this is the reason, this is the end game. This is what we want. We want to be able to extract those profits from the market and, to serve us, to elevate our quality of life, whatever that may be. What could
So,
you do with this kind of withdrawal?
these questions, how do we get these from the site, from the 5ers site? Once you make your first withdrawal, then you'll be able to, we will send you a link to register. Once you've registered, then instantly you'll be able to open up yourself a virtual card, get your physical card if you want to order a physical card. It is as soon as you make your first withdrawal. You won't be able to get there from just go into this account and opening it yourself. It doesn't work like that. There's a lot of stuff on the back end that happens to get you that access. But, so if you have never had a withdrawal before, it is the best way to do it. I don't think I'll be using a different way other than maybe withdraw into crypto, because I want to add my profits into the crypto market at the moment. It's actually what I should have done, because the market is probably a good place to buy, but I'm quite exposed. So I don't think I'll be adding more to crypto. But there you go.
Nice. Very inspiring.
What's the plan for the news? What are we looking for?
Well, I'm not in the market. I don't have any positions. However, what I'm looking for on the news is on CAD. So it's not one of those pairs that I typically trade. Although if the setup is there, I would take it if I see it.
Yeah.
So I don't have any CAD CPI CAD news. I don't have any. Actually, I don't have any expectations since I'm not in the trade. I don't have to, think about cutting risk for the news. I'm just waiting for. There are a couple of order blocks on the H2, not the H4. The H4 doesn't have anything yet, right? There is an if you look well, there that high was taken out, so we do have an outside bar, but we're not there yet. If you see, this is the outside bar on the H4. That is what I'm waiting for price to come to, right? But that hasn't happened yet. So on the H2, however, we do have two order blocks.
Just stop you for a sec, Victor. Do you want to just pull up a CAD chart? Let's pull up USD CAD or
Sure.
CAD, and let's see what happens, because I reckon people are shorting USD CAD right now.
20 seconds to the news. Let me get a little bit of. I will clean the whole chart.
We've also got, people are using the Discord for the questions, submissions. I love it. I love it.
Nice.
We're going to go in there and Victor's going to go in there. Wow.
Wow, that's a very good, very good reaction there. We have, what's that, like a 25 pip move?
Super frustrating. But you never know. That's the problem. You never know what news is going to do. It could have just came down and just broke every single...
Making new highs on dollar CAD. Look at that candle. Oof.
Yeah, so I reckon it's going straight to us. That resistance up there. Let me see if I can get on the retest. I'm definitely getting on a retest.
You're getting me tempted to trade that move as well.
If it hits this rejection first, then to be honest, this resistance first, then I'll be looking for a short, to be honest, if it already hits this. If it doesn't hit this and it comes back down, then I'll try and trade it upwards. But nah.
The market structure is very, very bullish.
Gosh. That would have been a few. Yeah. Wow.
Nice move, and it didn't have any wicks on the downside. Those are the, you know,
Great.
the nicest
That
moves
doesn't happen
because you,
a lot, though. It doesn't happen a lot. Sometimes you get books, sometimes it's quick seesaw, take people out. That's really that's in line with the overall trend as well. That thing goes great. There you go.
I'm looking at the market structure, and it's very bullish.
Yeah.
On the H4 and on the daily, this has been going, and of course, this is a safe haven move, I suppose, right? Risk off dollar move because of the geopolitical situation. So, yeah, very nice nice move up here. Has all been making those higher lows, higher highs, and
beautiful structure. Super structure. Yeah, I see. The problem is with this: if you're trading heavy lot size, the slippage isn't worth the trade. Seriously.
Yes.
If you get slipped, you get slipped 10 pips, and you've got like a 20 lot or 30 lot trade, you're losing thousands. You know, you could lose 3,000, 2,000. You don't want to put that extra risk on the trade. That's why I prefer to take all risk off. But
let's look at gold. Gold hasn't moved on that. Of course, it's a CAD move, so
yeah, it's a CAD news.
Yeah. Well, for those who were in this trade.
Oh, that could have been me. Oh god. Okay, there you go.
But what you should not do right now is calculate how much you would have won.
No, don't say that because now I'm thinking about
it. Don't do that.
Think about it.
Don't do it. God. You had 2 positions in, I think, right? Were you 10 or 20 in?
I was 20 in, actually. I was 20 in. Let's have a look. Yeah, I was 20 in. I didn't get many. I didn't get
what's
many
the pip value? That's about 20 should be like 250.
Let's have a look. How do I change this to, gosh, am I being lots of amounts? How do we change this to pips? I'm going brain dead. Anyway, those were the trade. Those they were okay. So you could just work it out though. It's 7 pips and 5 pips. So I got pretty much out break even, basically. So it wasn't not that
7 pips. So basically, it's about it's about 100 and it's about 200, around 200 per pip. So what kind of movement we had? That's about
you had 61.
That's
so
60.
That'd be
12,000.
Okay,
12,000. Let's not do that.
Oh, that is. Why did you say that, Victor? What are you doing to me, bro? That was
next time you will.
I'm only joking.
No, but it's you did the right thing. That's important.
100%. But the moment you get into the habit of trading high impact news and you get a big winner, you're going to be chasing that winner forever, and it eventually will bite you big time. So
yes, you did the right thing. When you have because this happened, now you could have had 12,000 extra profits, but what if it were the other way around?
Yeah.
What if it went 60 pips against you and your stop loss didn't hold? Right?
Yeah.
You should look at the other way around. Instead of winning 12, perhaps you would be 6,000 down or 8,000 down. I mean, and that's you don't want to be in that position
right there. That's a blown account. If you hit 5% on the 5ers, you're 5% in a day. You're out. Unfortunately, that's a blown account straight away.
Yeah,
absolutely not worth it. Maybe
yeah,
in a
yeah, yeah. No,
personal account. No, actually, a personal account is definitely not worth it. It's just not worth it in general, guys.
it's not worth it. It doesn't matter what kind of account you have, but it's not worth it because the stop loss is a fake security. It does not
Yeah,
assure you,
it's
guarantee you that the cost, the loss will not be bigger. And
yeah,
what you did, even though it feels sore now, looking at all those profits, but actually the reality, those profits were never really there because it's
no
not a
imaginary
position.
profit. It's
Yeah,
imaginary profits until it's there in your bank account. It's imaginary profits, and at the end of the day, with
yeah.
things like news, you can only get out when the market allows you to get out, and that is something as a trader when you're trying to manage risk is probably the worst thing that you can do. If you've got a set amount of risk that you're putting on a trade, and then you take that responsibility away from you and you take it out, then that's just a recipe for you just blowing your account. So any day.
Yeah, the first rule in trading is to conserve capital. Like that's number one. It's not about making profit. That's not number one. First is conserve capital. So risk management is key, right? It doesn't matter if last week you could have made, 10,000, 50, whatever amount. It doesn't
Mhm.
matter if the following week you're gonna blow the account, right? So
Agree.
the first thing is first rule. That's the golden rule. First, you gotta know how to conserve capital, keep the account alive. If you're in a prop firm, that's way more important than getting those home runs like this one, because in the long run that pays you better. That pays, you're gonna get in the long run doing what you're doing. If you have your edge and you have your risk management in place and your mindset and everything you need, in the long run you're gonna have a lot more profit than those big ones that you might have gotten but are not actually, they're not attainable because their risk is not justified. In terms of risk, it doesn't make sense to take those trades.
Yeah, there you go. Guys, do you guys ready how to learn the Quasimodo technique? This is how you trade. You've been trading like this for how long now, Victor?
I've been trading this way about 3 years. 3 years now, yeah.
Past funded
Actually,
accounts, funded, all with
yes,
this strategy, all with this technique.
yes, yes. The account I showed a couple of days, I think it was 2 weeks ago, that I
Yeah.
passed is using the concept that I'm talking about this week, the order blocks and the Quasimodo pattern. So
Yeah.
actually, I'm showing right there the tools that you could use to be profitable, be consistent in the market once you master those tools, the strategy, and you could be next making 15,000 withdrawals. It's
No,
all
don't put
within
it.
your
Don't
reach.
say that. Don't say that. Don't say that to people. There's some people that take less risk. I really did risk 1%, sometimes even more, because I had a good run up. Sometimes you can have a really good run up, guys, and you get a buffer and you can keep risking. Honestly, we always say halve the risk. As soon as you get the funded account, halve the risk, quarter of a risk, really be risk adjust. Don't keep using the same kind of risk that you would use in the evaluation. I have been on a really good run recently, and that can all change. That can literally change tomorrow. I could go even on live stream in the next couple of days and blow this account. I've got no buffer anymore. I've got to reduce my risk now. I've taken profits, but now I've got nothing that actually protects me other than risk management. So that's all I can say to that. And don't look at the
Well,
numbers. Just concentrate on the strategy and the technique, and that's what we need to focus on.
I agree. I agree. When you go back into that, when you're, well, before trading, right? Talking about big numbers is inspiring. I think
Yeah.
it inspires me, to work harder, be better, put in the hours because you have. There's no other way. There's no shortcut. You have to put in the hours. You have to, improve as a trader to become and to reach those levels. And in that sense, I don't shy away from. I wouldn't shy away from too much, right?
Mm.
Of course, you have to. When we think about big numbers, it's not a invitation for you to risk more than you should. and to take on to gamble, right? To me, gamble means when you're taking risk without having an edge. And
Yep.
that's not about trading. Trading is about taking calculated risk, and that's what you've been doing, Alex. Even though you trade bigger than perhaps others and bigger than I would, given the account size, the fact is you have a system, you have a management system, something that you have uh, worked out that is adequate for that size and for your
Correct.
personality and for your strategy. So there's a lot of things behind those big. It's not just luck, right? There,
No,
you
definitely
had
7 years, 7 years of blowing and
yeah
testing and making, and being a trader is super long journey. You've got to really stick at it. There's amount of times I can't even remember the amount of times where I've lost tons of money and said, you know what, trading is literally not for me. I don't want to do this anymore. And something kept me going. Maybe it was the challenge of, I know I could be better. I know I
hmm
can make that kind of cash, or I know I can make my strategy better, and all of these different things. But there were times, and then maybe there's somebody sitting there right now that have just blown their account right now on the news, and they've done it again. They knew they made the mistake, and they had a hope that they would pass their funded account, or they've got their funded account, and they had that hope of making a lot of money. And don't worry, like, there is light at the end of the tunnel. You've just got to keep to your rules and keep turning up, and it does eventually
yeah
click. It does eventually happen, but it's a
yeah
long,
yeah I go ahead.
it's a journey. I was just
No, no.
gonna say, it's like, it makes it easy with us trading in the trading room. We're always putting on trades, and we joke around and we play around and we make fun of each other, and we're very easy and light-hearted about it. But it all of us have made a lot of sacrifices being traders, and all of us have put a lot of opportunity cost into this to be traders, and it is very, 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 very difficult. And there is light at the end of the tunnel as long as you put in the time and hours to make yourself better. Because if you're doing the same mistakes and you're not changing, then you're just on that hamster wheel. As soon as you get off the hamster wheel and you start improving, that's when you start seeing the potential of trading. But it's super, super hard.
Yeah, I agree completely with you. I think when you go to social media, you see only those who actually, you don't see those who made it, because a lot of you don't know everyone on social media if they're really actually profitable, because they show you what they want you to see. But assuming that they're actually profitable, you only see those who make it to the other side, and that's a bias. That's a survival bias, I think you call it, right? You don't see for everyone who makes it, how many were not able to make it, right? That sounds very not very inviting as a career.
Yeah.
However, I would say one of the most important character traits that you could have as a trader is persistence. Persisting,
Yeah.
because you're gonna be losing on a daily basis sometimes. But not only
Fact.
that, you could be going after one strategy and putting in weeks and months of time, only to end up concluding that you couldn't. There's no edge there for you, right? So if you and you have to start all over again, looking for another strategy, or how to take something. Sometimes, for example, I like at the beginning, and I need to like do a little study in my back testing to see if like one concept is going to work or not. When I think I see a phenomenon, I go in my back testing and see if I can if there's a way for me to catch it. And sometimes I put in the hours, the days, and the conclusion is no. There's nothing there to be done. At least I couldn't do it. And then all that time that I put in is it's experience, but it's gone. I don't get anything from it. Only the knowledge that what not to do. But I still have to continue and persist with the process to become a better trader. And I think that's one of the, not only in trading, in life in general, persistence is is so important, right?
Yep.
So All right. So shall I start talking about?
You want to start? Yeah, go for it. I'm gonna pop myself out. I'll be back towards the end once you finish, and we'll do the giveaway and we'll just sum up everything. But
Yeah.
guys, enjoy. I'll be listening to this in the background as well. Any kind of questions that you have for Victor, make them, put them in the chat. I'm gonna star them, and at the end we'll go through it because I want Victor to fully go through his process, go through what he looks for, and then go through questions at the end. So it's very he can stay focused and concentrate. All right.
Yeah. About halfway in, we will take a break. So I think perhaps in perhaps 20 minutes, 15 minutes, I'll see how I keep track of the time.
Perfect.
All right.
All right. Do that.
Let's see. I see in the chat a lot of comments. I like that. Keep them coming in. If you have questions about what I'm going to be talking about as well, um, do ask those questions because I'll try my best to watch them. All right. Let's see. We have this today. I'm going to be talking about um, this topic. If you haven't seen the title yet, let's see. I'm going to be talking about this beautiful fellow here. For those who don't know him, he is called Quasimodo, and perhaps you know him from the Disney story. But actually, it was a character, a fictional character in a novel, very old novel from called Hunchback of Notre Dame, or Notre Dame, as the French would say. Um, yeah, so it's and the reason it's called after Quasimodo is because of the not being symmetrical shape of the person, right? And that is what how that's typical of a Quasimodo. Quasimodo typically, because it's kind of a little long name. I, but not only I, a lot of us, we short it to Quasi, right? So, what is Quasimodo and why is it important for you to learn about it? Quasimodo is a reversal pattern, right? So it indicates the possibility or the higher chance of a reversal in the market, right? Among other reversal patterns, right? You have many reversal patterns. You have the head and shoulder, right? Which I'll come back to why I mentioned it the first one. You have the head and shoulder, you have the double top or double bottom, you have the triple top, triple bottom, right? You also have the wedges, falling wedges, and so on, and the rounding bottoms, right? Rounding top as well. Those are the common reversal pattern that we see in the market that can help you indicate or help you identify those reversals. Okay. So to begin with, to understand the Quasimodo is actually a version, a variant of the head and shoulder, right? And I will show you the typical head and shoulder, and from then we will talk about the Quasimodo, right? This is the head and shoulder where you have an uptrend. In this case, it's a bearish head and shoulder, right? Because it's a reversal pattern that you typically see at the end of a bullish move um, before price change direction and starts going lower, right? So this is the typical like textbook example of a head and shoulder pattern, right? Here you have a uptrend. In this case, right, higher highs. Let me indicate them with, right. You have higher highs and you have higher lows, right? It's important because in order for you to look for a reversal, you need to identify the trend. If there are no trend, you shouldn't be looking for any reversal, because if it's only ranging, um, if you see anything that resembles a head and shoulder or a quasi, those are not the good ones. The good ones are when you have a trend, a established trend, uh, because otherwise there is no reversal, right? So the first thing is you have to know what kind of trend you are. So the beginning, you have the market structure of higher highs and higher lows, as we can see here. And then at in this case, the head and shoulder, you have a newer higher high, but instead of making a higher low as it was doing before, it makes a an equal low, right? And after that, and that is already a sign that something has changed. Okay, something has changed in the market structure. It no longer is making the same higher highs. After that, you have a, in the textbook you would say, you will see it as an equal low, but in reality it doesn't have to be exactly this way, right? So you have the this is called the shoulder, left shoulder, right? This the one before the peak. This is the head, and this would be the right shoulder, right? And you have, this is important for the head and shoulder, you have the neckline, right? So this is the head and shoulder, and it's a great pattern. Many people use it, and it's one of those patterns that's very popular, actually. Okay, so this is the head and shoulder. So the quasi is different. Instead of having a equal low after the head is has been put in, right? We have not a equal low between these two forming the neckline, but you actually have, this being the neckline, you actually have a break of the neckline. And that's can be for a little, but it can also be a lot more. Doesn't matter. The fact is that it's no longer an equal low. And as you can see, it no longer is symmetrical. That's why, hence the name Quasimodo, because it's asymmetrical. After the neckline is broken, what we then see is a move up to form the right shoulder, right? And after that, you have the structure. The This is after the neckline is broken. You actually you have that change of character, right? The structure has changed, so the market now starts to make lower lows and lower highs as the move is concluded, right? So you that's the reversal pattern that basically it tells you, um, it's a way how the market goes about changing from one trend and switching to the opposite trend, right? A reversal. And I find it very helpful. It's one of the building blocks of my system. So there is this is awesome, I think, and there's so much you can do with this. All right. So this is the Quasimodo, and I will show you. Let's see. I will show you how you trade it. Right. So this can happen actually anywhere in the market, but let aside the context of where it happens. Right. I will come back to that, since yesterday I talked about order blocks, and at the end of this session, I will try to make that connection, how you can make use of today's concept, the Quasimodo, and yesterday's concept, the order block. If you haven't seen it, please check on YouTube our videos. As you can see that session, that presentation I did on the order blocks. Okay, so how do you trade this? I will let's see if I can. Yeah, let's see. Well, there are a number of ways you can trade it. I will use another figure so I can play with it as the market is forming. Okay, so imagine you have you're trading the Quasimodo, and you're looking at the market, and you see that the market has broken a significant low, right? After that happens, and this move typically is a very strong move, doesn't have to be always the case, but typically this is a strong move. Um, it is when the market, right? The normally at a head and shoulder, one of the ways. Let me change this for the head and shoulder. Normally, the head and shoulder, the typical entry for the head and shoulder is when the neckline, right? The neckline is broken. The close, the body close after that is the typical, the traditional entry method of the head and shoulder, which is, let me see, I am on the 50 minutes, so let me use perhaps this one. After the candle closes, that's where you put in your entry. So after it breaks that neckline, you put in your order. This is the typical head and shoulder. This is not the Quasimodo, right? You put in your entry. I will talk in a little bit about where you put your stops, and that's your entry, right? So you target some structure above, below, or depending on your TP placement, which I will discuss too in a little bit. However, with the quasi, right, um, you also have the same choice, but in this case, I wouldn't recommend that traditional. Actually, the head and shoulder, even the head and shoulder, I wouldn't recommend that traditional entry. Um, Even though it's a kind of a safe entry, I think there's more edge if you look a little bit further. The different type of entries are, you can either um, wait for the market to come back. So let's say this one. When the market comes back to form that right shoulder, you could be looking in the lower time frames for a reversal. In that case, that will be making use of um, a lower time frame, or you could also use candlestick patterns indicating a rejection. So you could be using, of course, more confluence, but you could be looking for uh, pin bars, or engulfing, or outside bars, or any candlestick pattern that indicates rejection. And if you and trying to catch that right shoulder before it it confirms the structure, right? Because in the traditional entry would be below the neckline, right? But to me, that's already kind of late. Doesn't have to be. You don't have to trade this way, right? This is the typical entry, right below the neckline when the bar closes, and you target something much lower. But I would. So this is one. That's a traditional entry, and the other one is by pinpointing or by anticipating the right shoulder. Okay, it's a little bit more difficult because you're trying to anticipate something that hasn't happened yet, right? Of course, you don't go at it blindly. You do have to have a structure to see where the entry would be. But even if you did not have that, you could be targeting. You could be putting your stop above the structure, right? In that case, it doesn't matter if this is the right shoulder, or if it's going to be a little bit higher. The other way of doing this is by adjusting or adding more um, more tools to refine your entry. And one of those tools is, for example, after the move has been already done, right? The move has it has broken the neckline, went up, and formed that right shoulder, come down and confirmed a quasi. What you could do at this point is take a retracement tool, right? The fib, and try to catch. Let's say you could put something like this, right? You have to do this. You have to do this. Um, you have to do this. You have to do your own. Um, uh, let's see, something like this. You have to do your own. homework and check what entry would be better for your strategy. But when you have a retracement, you could put at the when it is confirmed, you can put in your fib, and it's up to you if you want to go for the 50%, or if you want to be more selective. You go to a 6.18, for example, or even more selective. Of course, the more selective you are, the less trades you will get. This way of entering, you could do that with a limit order, and your stop in terms of placing your stop could be either this high, that right shoulder, or the complete structure. That's up to you, right? Depends on where you depends on your data, of course, right? But it also depends on what kind of trader are you. Are you going to hold it for much longer or not? Because then you'll have a different profile in terms of risk reward. So that this could be one way of entering. So using when you enter at the confirmation of the structure, right? So not doing it anticipating that right shoulder, but after it has confirmed and closed below the neckline. When you have this, you could enter at the close or at some level of retracements. That is one possibility, and the other one is not using the right shoulder, but using the whole structure, right? So you're anticipating, and this is of course much more safer, because sometimes the market that high might not be the only high it makes before it has that move that you're expecting to catch, right? So this would be much more safer to for your entry, um, because it gives you a better risk reward, right? So if you enter, for example, if you enter at the, let me move this around. If you enter at the confirmation, right, and imagining you have your stop all the way on the structure, you can already see that you will need a lot more space for the target. Instead, if you wait for a retracement, you can have a much tighter distance to stop loss, thus increasing your the risk reward that you could be gaining on each trade. However, price doesn't always come back for a second retracement this high, right? And sometimes it just that this is the only chance you get to get into the move, because it does something like this. And if you're waiting for your entry much higher, you will just miss the trade. So that's the trade-off you have. You typically have that, and in every strategy, you can go for more selective entries, but on the but you will be missing a lot of trades or more trades, or you can be less selective, having more trades, but your trades will not be the risk reward will not be the same, right? So that's a typical trade-off you have with many strategies. So that is the different entries. Just to recap, we have the entry that is on the confirmation of the close, right? When it closes, breaking that neckline, the quasi is then complete. You have that entry, or you can preemptively look for an entry on the right shoulder before you have that confirmation. That's the same trade-off you have. If you wait for the confirmation, sometimes you will be giving up something, either in terms of risk reward, right, for that assurance, or perhaps you will be missing some trades, right, because perhaps this move closes way much lower, and at that time it may not make sense for you to enter anymore, right? Let's see in the chat if we have any questions about this. Let's see. Someone asked about time frames. After the break, I will talk about time frames, and um, I will show the different how I see it in the market and how I use this. Um, Someone says Quasimodo never fails. Well, that's it's a great optimism. I like that. Let's see, what else do we have in terms of questions? All right. Okay. Okay. I see. Okay. Alex, would you like to? I'm not sure. Would you like us to take a break, or shall we continue uh, with the presentation? What do you think? You're muted. No, you're muted. You're muted.
Muted. Thought so.
Yes.
Got you. It's up to you, mate. You are the star at the moment, so it's up to you. How do you feel? We can do it. We can do a quick 10-minute break, and then we can go and have a look at what we've got going on in the markets, and then do the giveaway. I actually see euros making some nice structure, but it is up to you. Let's do a 10-minute break, because I know you've been going along, and we'll come back and we'll see what opportunities we've got in the market.
All right.
All right. I'll see you guys.
Yes.
We'll see you guys in 20 minutes. In 20 minutes? 10 minutes. We'll see you guys in 10. And we're back. How is
All
everybody
right.
doing? Let me put some music
Cool.
on.
Let's continue. I noticed quite some good questions in the chat. After the presentation, I will talk about them. I'll discuss them. Very good. I like them. Thank you for those good questions. So, shall we continue?
Yep, go for it. You've still got more on the. So yeah, I'm going to be in the background, and just let me know when to come back, and we'll do the giveaway.
Sure. All right, let's see. We were talking about the quasi before the break, and I let's continue with the what we discussed what it is. Right, it's a variant of the head and shoulder, and I explained what's the difference between a head and shoulder and the quasi. It is the asymmetry that it forms when it breaks that neckline, this being the neckline, right? This is the difference between a head and shoulder and this is a Quasimodo. When it breaks it, someone in the audience asked, what if it breaks it only with a wick and not with the body? Those little nuances are what makes trading, I think, difficult because indeed there's a difference. And I don't know if there is uh, a single right answer to that. To me, you can have different variation in rules, what you consider if this neckline is broken or not. But to me, what's important is that you always use the same rule. So if you choose to consider the wicks as well, then you should stick to that rule going forward. That's, I think, most important. Not nothing. It's not the most important whether you consider the wick or the body, whether it needs to close below or not. All of that is up to you actually. Okay, so I don't trade head and shoulders in the sense that I only trade Quasimodo, so only a specific kind of head and shoulder, right? The quasi. Um, Next thing. So we talked about the difference between the head and shoulder and a Quasimodo, and I showed you the different kinds of entries that you could have, like how to trade it, right? Um, there are a couple of ways you can trade it, which one is at the break, at the close, after it forms the let me make this bigger for the audience. One 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 way of entering, right? This is the left shoulder, the head, and the right shoulder. And one way of entry that I mentioned was after it closes below the neckline, after the right shoulder, so after the whole structure is already formed and it's complete, and that would be considered a entry after confirmation, right? Because the market confirmed by closing below that neckline that the structure is already complete, so that's like a entry with confirmation. But you could also enter before that confirmation, right? That is, of course, without confirmation, that would be considered more risky because you don't have the structure complete yet. You are anticipating that this would be a right shoulder without the structure actually completing. Whether or not you do the entry with confirmation or without is something that you need to find out what works best for you. I can tell you what I do, but again, it's not something that you should just copy because I do it. In the end, the goal is not to trade like I do or like anyone else. The goal is to find one set of rules, right? One strategy where you put in all those rules and you've built a system that works for you, for your as a whole. It needs to work, right? So in my system, I enter I try to enter in the right shoulder as it is being formed, right? So without confirmation that it actually is a head and shoulder yet, right? And if you consider it, you would say that that's the riskier entry, right? The more conservative entry is after it confirms, after it after forming that right shoulder, and it closes below the neckline. Okay. One thing else I can say is that if you enter the risky one, you don't have necessarily a quasi yet, right? The quasi hasn't been confirmed yet, so this could easily, be something like this, which isn't a quasi anymore, and it never, it never confirmed to be a quasi by breaking and closing below the neckline, and where you would expect this kind of movement, perhaps not as high, but something like this. This would be, let me see, this would be the confirmed movement, right? So that is the risk you're taking if you are entering, at that area, right? So those are the two entries. You have the one with confirmation and the other one without confirmation. And of course, you have variances. You can take, as I mentioned, you can enter like after the confirmation, right? So you do it. You do wait for the confirmation, but after the confirmation, you wait for the retracement, right? So that retracement would be, for example, what I showed in the previous, before the break. The confirmation would be, and this is up to you, how much retracement will you be taking, where would you put your entry, where you put your limit order. I like this way of trading because if you can find edge this way by putting a limit order there, this is very easily done, because once it closes down, you can already put your limit order and you could, in principle, walk away, set and forget. I like about strategies that are set and forget, because they can be combined better for traders who perhaps don't have the luxury to look at the chart constantly and waiting for that entry to happen, or waiting for that reversal pattern on the lower time frame to present itself, right? So that is another way where you can wait for the confirmation and then enter in the retracement. Okay, if you do that, um, so those are basically the entry ways to go about it. And I will show you, there are more ways, but I'll try not to make it too complicated. The other question is, where do I put the stop? And that's very easy. If you have the structure, you can already guess by the way I put these stops so far. It is that, first stop is above that right shoulder, right? If you enter at the confirmation, and even if you enter, let's say, at a lower time frame, and you put your stop above that area that on the lower time frame showed you that reversal pattern, either be a candlestick combination or a pattern like the quasi, another quasi, but on a lower time frame, right? Or it can be any other reversal pattern. It's up to you. Double top, triple top, whatever that you could be using on the lower time frame. You don't need to use the same pattern necessarily on all time frames. I do it though. I do look only. I only use Quasimodo, but you're free to use other reversal patterns in combinations with this pattern, this Quasimodo. So the first area is that right shoulder as the stop, to put your stop a little bit beyond it, right? That's one, and the other one is all the way the whole structure, which is including the head as well, right? So that's the right shoulder. This is this is the right shoulder. Sorry, this is the left shoulder, and this is the head, right? And the other option is to put it through to include the whole structure in your stop loss placement. That is the safest place to put it, because sometimes the market can do a lot of things. It can, even though it confirmed, it can still sometimes squeeze and wick any higher positions before any higher level before it actually continues, right? This textbook form of quasi, in reality, it doesn't happen like this, right? We will go after after explaining about the target, the stop loss and targets. We will go into real market to see some examples. So the stop placement can be on the right shoulder or the head. Basically, those are the two areas. There are more areas. For example, you could combine other concept as well. For example, order blocks, and you could be using those together. But I will show you that at the end. Okay, so we have that. This is those are for the stops. And what about the? You would ask yourself, what about the targets? Okay, there are a couple of options here. If you enter, it doesn't matter where you enter, but assuming you enter at the confirmation, right? Basically, you have two options, two or three options. Assuming that, let's say you have you put your stop beyond the head. Your first option is, well, in some trading books, especially the old ones, what they teach you is to measure the whole structure. In this case, it's 191 pips, and trade the same distance, that the same length or size of that range that formed the quasi, to have that as your target. So it'll be 191. So that would be something like this. That's 809866. So let's put it there, something like this. And that would be your first option. So your first option is based on the size of the structure, right? That's one. The second one is to have your target based on a structure that is on the left. Perhaps there is something here. It can be an order block, or it can be something else that the market, as it was going up, left behind, that you can use as the target. Right? So this is the second option, is based on PA. So you let the market tell you the structure of the market on the chart on the left, to let you know where is a good place to be placing your target. And the third one is, you could disregard the structures and the size of the formation, right? The quasi size, the range that it had, and you could only base it on a fixed risk reward ratio, right? 1 to 3, 1 to 4, 1 to 1. It's up to you, right? It depends on your strategy, and you should look in your data for what is optimal for you, right? Personally, I like to trade the second option, right? The second option being to have my target based on PA. So I will be looking to the left, and I will include other considerations as well, not only the structure, uh, to put my target, but usually they're based very much so based on structures that the market has left behind, telling me where market could find support or demand could come in. Okay, so those are the options you have in terms of stop loss and targets. Okay, okay, let's look at the a real market, price. What else? What do we see here? Let's look at. I think before I started, I had was it on the weekly? Yes. Okay, so this is actually, I talk about this a lot on my on the our workshop sessions we have in Discord. If you are if you are learning trading, you're new to the market and you want to learn more, a good place to check out is our Discord server. We are focused on your growth as a trader, right? And you can we have on every weekday we have sessions explaining, not only showing market analysis in real time, but also explaining about these concepts into more details, and you get a chance to ask your questions, or even post your trades and have us look at them. Okay, let's continue. We have here, if you look at the market structure, you do see that quasi forming, right? We had a market. Let me include this. This is on the weekly, but in principle, it doesn't matter what time frame it is. You will have these structures on all time frame. The market is fractal, and you will see them on the monthly, the weekly, the minute, the seconds, whatever you made, the hours, it doesn't matter. Okay. So now you have, as you can see, you have higher highs, higher low, you have a head, right? This line would be the neckline, right? It breaks it and forms the quasi. Now you have a quasi formation, right? It's not a confirmed yet, but it is to me, it's already a possible quasi. So I'm ready with my setup, and you're expecting that right shoulder as the market moves away so this is basically the pattern, right? So this is the look at this. That's the neckline. I will change it to some other color, perhaps that is more visible, right? That's red. No, maybe red is not not distinctive enough. Maybe I should just make it thicker. Let's change it to something a lot more thicker, and perhaps yeah, I think perhaps something like this, right? So you have that's the neckline, very obvious to see. And this is how it goes. Well, you can wait for since this is the neckline, you can wait for the close of the market. I'll take out the yellow the yellow lines so you can see the structure better. You can wait for the entry here in terms of the confirmation is here, right? When it comes back and close below that neckline, that will be the confirmation. In this case, it didn't, right? So you don't have the confirmation yet, and you could be, but when it does, you could be targeting, that will be the right shoulder. You put your stop above this, and depending on the type of target you chose, whether you choose to do it on in terms of measuring the structure, right? Measuring the structure would be taking from the highest point, the head, to that low, right? That's 827, and then you flip that amount, right? So you think it's going to be do another 828, right? That would be something like this. That would be 9624, 9624, and there you go. That would be the setup, right? And in terms of the stop loss, in terms of the stop loss, as I said, you can put it on the top above the right shoulder or above the whole structure, right? You can see the risk reward here. It's 1.3, 1.3, and if you put it closer, it's 1.6. Okay, that's one option for the target. The other one, you could be targeting some structure, so PA, right? Structure demand area that you already have in place, that the market has shown us where the buyers will come in, right? In that case, this is a weekly chart, so I need to choose the weekly template. So it does show, which is down below. That's the weekly target, the weekly structure. Then you could be targeting either within or the upper border or right before of it. That's up to you. You need to find that optimal placement in your back testing. Okay, and the other one is simply based on one-to-one, right? So you put in a little bit above the right shoulder, and you put in one-to-one like that. I mean, as simple as that, right? One-to-one, it could be 1 to 3, 1.5, whatever whatever your data tells you that is adequate for the way you trade. Okay, so that is, and the way I trade, I will show you that. The way I trade is this. This is the following. When you have the market, this is the head, right? That's the left shoulder, the head. That's the break of the neckline. And when the market back to form that right shoulder, what I do is I go to the lower time frames. So I try to enter in here somewhere, right, based on the lower time frames, and I try to catch by merging two time frames or more than two time frames. I try to catch uh, instead of getting 1 to 2 or 1 to 3, perhaps I catch a lot more. Of course, that brings down my win rate because my stop will be much lower, and I'm entering based on a lower time frame. But on this time frame, um, let's say you're doing it on the H1, and but the structure is on H4, right? That the fact when you do that, when you have tighter stops, it exposes you for the risk of being stopped out more than if you were only to take it on the higher time frame, right? Okay. Let's see. The other thing is that I want to mention before we finish is the following. What I do. So this is the Quasimodo. I think the Quasimodo is, and this is um, my true opinion on the Quasimodo. I think that the Quasimodo is one of the most powerful patterns in the market. I truly believe that, and that's why I trade it every day. I don't trade all the other patterns. I only focus on the Quasimodo, and it is for a reason, right? What I like about the Quasimodo is that it is kind of advanced, right? In terms of the structure has a number of things that it needs to do to be considered a Quasimodo, but that fact that it has all those structure, all those it's a little bit advanced, makes it helps traders like me who suffer from the risk of over trading, because it has many steps that it needs to comply with before it actually gives a signal. So that helps me being selective, and it is, and you will find out when you start looking at them, start testing them, that they offer you they offer a lot of edge. I'm very confident that you will be able to see that too once you start looking at them. What I do is this. So no, what I wanted to say was that the other thing is, whenever so yesterday I talked about order blocks, and today I talked about Quasimodo. What I do is I merge those two concepts. So those are the two concepts that I use every day. So in my quasis, for example, what I do is I look to the left, right? So when the market is doing this, making that higher high, that head breaks the neckline and goes to form uh, that right shoulder, what I do is I look to the left to see if there isn't one here, but to see if I find an order block there, right? So I'm combining that order block idea, because I know that is a place where the market participant might come in, if it's a supply zone, where it might come in and push price in my direction. So I combine those two concepts to pinpoint my entry, and that helps me to get sometimes insane risk reward. I sometimes catch dozens of risk reward in 1 to 20, 1 to 40, and I have even in the past catch moves 1 to over 100, and it's not a joke. They don't happen very often, but by using those two concept of order block and quasis, and using top-down analysis, that's another thing that I use. Right, you can refine your entry and trade and have a very tight stop. You don't have to trade it that way, but that I'm just explaining. I share how I do it. Um, uh, but yeah, you can have insane edge on in the market. All right, so that is about the quasi and how I combine those two ideas of the quasi plus the order block. Let's look at the market currently. Let's look at the. I think there was a couple of questions. Let's see what we can um, answer them. Someone asked, "On what time frame should we look for the quasi?" Well, the market, the concept of quasi doesn't have a preference for the time frame. They happen on all time frame, from the monthly, weekly, daily, minutes, hourly. It doesn't matter. You will see them on all time frame, and it works. It works the same, equally good, in my opinion. Right? The time frame should be dependent on the amount of time that you have available to look at the charts. Right? If you're still working a full-time job, and probably you will need to stay on the higher time frames, like the H4, or perhaps even on the daily. Someone said it's something like a reclaimed order block, and about talking about the quasi, and I actually agree completely with this person, right? Because this, I don't know if you can. Let me see if I can perhaps make this uh, visible. I will try to do that by doing this. This is a bullish bar. Of course, it's not that wide, and we will make another one, and we will make it red so you can distinguish them. Okay, this is what happens in the market. You will see I just showed you that this is a quasi, right? But in the market, it depends on the time frame you are in, because this could be, let's say, right, this could be a bullish bar going up, and this could be an engulfing. And that right shoulder is actually the same concept that I talked about yesterday. This doesn't happen all the time, but a lot of times this will be the case, that a quasi in one time frame is actually an order block, or an engulfing in another time frame, a higher time frame. And you could be seeing this is basically the retest of that order block, right? So we have this being the order block. Let me do this correctly. This is on the weekly. Yes. So you could be seeing this is the order block, right? What we talked about yesterday. You see how it's completely different. One is a Quasimodo, and the other one is a two candlestick pattern. But actually, when you look at different time frames, they're they're the same. No, it doesn't happen all the time, but you're looking at the same. And I like that comment, because I see that all the time, right? So the order block could be a quasi in a lower time frame, or the other way around, right? The quasi could be an order block in a higher time frame. Okay, so let's look at a few questions. Let's see here. What do we have? Someone asked if only the break is based on wicks. I already discussed that. In that case, there it depends on your preference and your rules. Um, let's say lower time frame. Someone asked what lower time frame would I recommend, and I think that's a good question, because there is a rule, or there is a something to be said about it, and that is the following: when you're doing top-down analysis, what I've seen is the following. When you go through, when you want to use a lower time frame, you need to know how far lower you can go, because if you go too much, let's say you're on the daily, right, and you want to take a lower time frame entry, going to the minutes doesn't make sense. Going to the 15 minutes doesn't make sense, right? And there is a rule, and that rule is to go about a factor 4 or 5 um, lower. So you divide the time. Let's say you earn the daily, you divide that by 4 or 5, and that amount of time, that's the time frame that you need to be using. If when you get one step, if you go much lower, the higher time frame, the step is too wide, too big, and it doesn't help. It doesn't help you. Right. So the sweet spot is around 4, 5, factor 4 or 5. Right. So if you're on the hourly, you can use the 50 minute. If you're on the 4 hour, you should be using the 1 hour. Okay. If you're on the daily, you use the 4 hour, etc. Okay. Let's see, what else do we have in terms of questions before which time frame I use. Um, Actually, there's something I didn't discuss. Maybe I should do it before the presentation ends. Um, I use I use all time frame, to be honest. I know it's maybe not the answer you want to hear, but that is true. I look from the top down analysis. I start on the monthly, and if there is a setup on the monthly, I will trade it um, on the monthly, and but only if I have lower time frame alignment. Hopefully, maybe in another session, another presentation, I can talk about that, how you merge the best way the different time frames. But I trade all time frames. In terms of my intraday trading, I use the H4. I hope that answers the question. There's something that I haven't spoken about, is that you can use different tools to adjust the entry, right? Especially if you're going for that risky entry on the right shoulder, right? Remember, I'll paint it again. This is the right shoulder, the head, the break of the neckline, and the right shoulder, right? If you're going for if you're doing the if you're doing the confirmed one, right? After the neckline, after it closes below the neckline, then perhaps you don't need any tools, any extra tools, right? But if you're going to the entry on the right shoulder, since the structure hasn't been confirmed yet, it might not be a bad idea for you to use other things that will help you increase your chance of catching that right shoulder. As what I was saying, like I use a reversal pattern on the lower time frame. I use order blocks to the left, which is in this leg, right? And another thing you could use is um, the fib. Let's see if we can. I have this, but actually I have, oh, that's not the one. Let's see. I think it's because I am on the higher time frame, because my template is, of course, for the smaller time frames. What I do is I will go to the lower time frame. Let's see if I can quickly find a quasi. Yep, that's one. It's actually broken. It didn't work, that one. Okay, so we do have, well, this is a head and shoulder, so it's not a great example, and perhaps on the 4 hour. Okay, so let's eliminate these and explain. Well, so one of the things you can do, this is on real market, real charts. So this is the higher high, and then, right, it makes that uh, lower high, but it's not the right shoulder, right? Because it hasn't broken any neckline. The neckline would be, in this case, it would be here, right? So after it breaks the neckline, it goes on to form that right shoulder, right? And one of the things you can use, if you can wait for the close below, you can wait for the close below that neckline and get in your trade like this. Oops. Right? As I explained, that's putting your stop above the right, putting your stop above the right shoulder, and this is the right shoulder. So you put your stop a little bit above this, and you target whatever the options I told you, either the structure on the left, or a specific risk reward ratio, or the size of the quasi. And or you can enter the risky way, which is when it forms the quasi, right? You have, this is the quasi, right? That's the right shoulder. You see how it's not very you see this, the yellow lines, it's not very symmetrical, right? That's why they call it Quasimodo, because it doesn't look beautiful. What I would do is uh actually, I you know what, I will just do this. This is the I went to this time frame to be able to. What I do is the following. You can use fib to help you be more. That's what I wanted to say. You can use the fib to help you be more selective with your entries, right? So, for example, this is, I actually trade this way. You put this on top of it, and by, for example, only trading if the fib comes above the 50% retracement. I have it upside down, right? It's like this. After the market, so this area, you only take entries if the right shoulder comes in this area. Let me see if I can. Oh, these tools are not cooperating with me. Let me. There we go. All right. So I only take, for example, one of the rules I use, I only take when it's above 50% retracement, because sometimes the right shoulder can be formed much lower, but it doesn't serve me well in terms of risk reward, right? Not only that, my win rate, sometimes it doesn't come this high, and I just let those trades go. So you can use other tools as well. Um, for example, Fibonacci tool, to help you be increase your win rate and your risk reward ratio, right? So I only take, for example, those that come when the right shoulder comes all the way up above the 50% retracement. That's something I forgot to mention. Okay, so that is basically everything you need to know about Quasi. I hope you learned a lot. If you have more questions, keep sending them. We have in our Discord, we have a new trading, a new room where you can post your answers, your I mean your questions with your setups, either just questions or with your setup, and we will discuss them live during our live trading room on YouTube. So I do invite you to come and join us on our Discord server. In order for you to be part of our Discord server, you have to have an account with the 5ers. So another reason to join the greatest prop firm of all. And I'm not I'm not joking. I really believe it is.
It's the greatest prop firm of all. I missed it. How's it going?
Yeah, great. I think I mentioned all the important stuff that I wanted to mention. And since we are in the market, I will see if we have something for the viewers to look at. What do we have?
I
I
did go
still don't have.
did go long actually. I kind of didn't a little bit of an
Did you?
impulsive buy. I will break it down. Let's have a look. This is what I was looking at. Let me pull it up. That is the trade that I'm looking at. This I got enough to see these candles here, but now we've had quite a big push down. It's still got to see if it finds support. If it breaks down, that's why my stop is in that area. But,
I do
that's
see
the
there.
trade.
There's a demand area on the 1 hour there. So there
Yeah.
you have a I can understand if the market could reverse from here and continue longer in your favor.
Yeah, it's a little bit of a risky play because it still hasn't shown us really a break of structure on the higher time frame.
Exactly. Yeah. The H4, the market structure is still making lower highs.
So it's but this kind of structure, this starting structure like this is something that I would trade. I would have actually, if I would have noticed, I would have probably got into this particular trade right here and aimed for the 200 on the 15 EMA. But that trade definitely got missed. This is more of a risky trade, getting in after a touch of the 200 EMA on the 15-minute. But I do have my own, my own experience saying it can push up above that and go maybe hit the top of the range. Seeing this kind of pattern here as well. All of this area of demand. You've got this area of demand. You could say a W pattern or a double bottom, whatever you like to see, around the 200 EMA, around a 50 fibs. So there are quite a few confluences showing that price can push up a little bit more. But again, when you're pushing up against the higher time frame trends, it can be quite dangerous, especially after we've had quite a big push down. But I think price, if we have a look, we were saying about it earlier, you have these big impulses down, big impulse down, and an impulse down, it's less and less and less, so I wouldn't be surprised if we have like a little bit of more of a push up. But this is what you would say is an order block on the 1 hour.
Yes.
Nice.
Yeah, I can see
there you go. You've got another confluence there. So we've got plenty of confluence. Here to find support.
Yeah, I think it looks like a great setup. Of course, it's not what I typically trade, but it doesn't have to be. We all have different strategies, and while we can even be in the opposite direction on the same asset, and still profit, both of us. So.
Oh wait, are you sure? Have you gone short?
No, I haven't gone. But I mean, in theory, I could catch a short while you're in a long, and I exit. It's just a retrace perhaps. Or maybe you're doing the retrace, I'm doing the main trend. So the fact that even if we have opposite direction doesn't mean, it doesn't invalidate your entry or yours mine. So just in general, I mean.
Got you. Yeah. I'll get the giveaway ready. As well, if anybody's got any questions and they want to go over, I'll just pop this.
There's one question here asked, do we need a funded account to join Discord? No, you don't. You only need to have an active account. Doesn't have to be funded. It can be a phase 1, and they start at I think $39 for the smallest account. So it doesn't cost much, and you can be part of our Discord server. You only have to have an account. Doesn't have to be funded. Let's see.
Okay. Normally, Jonathan is here to post this and to pin it. Victor, I'm going to have to.
Yes. Yeah, sure. I will. Would you like me to do market analysis on some asset while you're doing that?
Yeah, or if there's any kind of questions people are asking, we'll go through a couple more questions. I know people are asking about them.
Yeah, I will check the questions, and if there are none, I will do some market analysis. You need to check. I think we need to have how many likes
how many likes? Right? We haven't liked people about the likes anymore. I think we're doing a really bad job of telling people to like and subscribe. We don't do that anymore, do we?
Yes, we should. We should. I according to the uh, to the browser we have right now, 511 likes at this moment. Just so
Good
you
stuff.
know, I'll check it again in a couple of minutes if you need to.
Yeah. So I posted. Okay,
So
it's asking for the. Okay, there you go. Secret word is that. I'm going to pin the comments of the. Will Israel war affect the Fiverr server in Israel? No, it will not. No, the server, we got a server in London, a server in New York. It's got nothing to do with that. Don't worry, nothing is going to be affected other than the volatility in the market. And if you are a trader, you're going to love the volatility if you're on the right side. If you're not, well, then you're in trouble. But don't worry about it. It is totally fine. Okay, I've got to go on to
yeah,
this. Don't worry,
the firm
guys.
has,
Just focus on the
yeah.
profits.
Let's see
Uh,
any other questions we may have. I see here. Someone asked me if I trade the equities index, and I don't. I might do that in the future. Um, I do have to confess, I do invest, of course, my profits, and I do trade, but that is not trading. That is more investing. So that's long term view, and I don't buy and I don't buy and sell. I just buy and hold for the long term, a passive investment. But no, not in trading. I don't trade the indices. I focus only mainly on EU, GU. I could trade any pair if I had to, but if I could choose, and that is I do have the choice, I trade only EU and GU, and possibly maybe in the future another pair. And the reason is because if you look at the spread we have on the 5ers, which is zero spread, um, I prefer to gravitate to those pairs that can have the lowest spread possible, and you have that with EU and GU. Although if you look at the spread we have on many pairs, there a lot of them is zero. So that is because of the spread, because of they move similarly. I use only those. I focus only on those two, and in my data, it lets me it has shown me that that's the best thing to do, not trade many, knowing a lot or having a lot of assets on my list, focusing on only, it can be as low as one, but I trade two, and that's enough. It gives me enough entries, even though I have periods where I have no trades, no signal at all. That allows me for me to monitor my previous trades, to do perhaps some backtesting, checking if everything is fine, going over my numbers. So it's a good balance. If I had many more, I would be trading, like executing my plan every day, all hours of the day, and that's not good. I need a good balance, and two for me is to forex asset is the good balance so far. So maybe in the
do
future, but right now I'm only trading those two. I want to trade gold as well, but I haven't started. In terms of possibility, I can, in terms of my strategy. By the way, your trade is going well, Alex.
Yeah, found a
I
nice,
see that.
nice little bit of support.
Yeah,
Um,
yeah. And when did you enter? Did you enter at the
entered
first?
off. I think it wasn't off the 1 minute. It was
Okay,
off. Let me have a look. Maybe it was off the 15. It was off the 15-minute chart, and I entered just after this candle close, and when it pushed up here. So
nice,
I found
nice.
myself in profit, and then this candle came down, and now we're pushing back up. But it was that this candle here that got me interested in the trade, because I thought it's holding this EMA, touched the top of here, 50 fib, and it's broke. Can't say it's broken structure, but it's broken inner structure. So you've got this inner structure here, which if we were going to take the leg down, we're not going to break up here. We'd have just carried on going down. So we haven't done that yet. So
I see.
I wanted to say just to this, just for the guys that are for the giveaway, you go to the pinned comment, you enter the giveaway code, you put 123456. It took me a very long time to think about that code, but that is a secret code for you to get in. Once you get in, you can get more entries by doing some of the other things. Victor is now on social media. The masked trader. Actually, Victor, have you opened it up yet, or are you just saying that you?
No, not yet. Okay. Actually,
on social
yes,
media.
I will. Yeah. Not yet, but soon to be open.
Soon. Okay. So take that back. You've got a couple of missions on there. If you want to get extra entries, you can do that. You've also got a loyalty thing. So if you've been here for 10 times, you get extra points. 11 times or even more. 30 times is an incredible amount of entries. So do that. The other thing is, guys, we're going to go for a couple of questions. US traders have 0.1 spread. Yes, unfortunately, all of our spreads in the 5ers, because we want to give our traders the best conditions. We want to be very competitive. Spreads are subsidized by us. We subsidize spreads. Those are not the spreads that we get from the LPs. We subsidize spreads. So match trader, you can't subsidize spreads to zero. That's it. It's just not, you can't do it in the thing. So that's just the way it is. So unfortunately, US traders, we are working on different platforms at the moment, in-house platforms and many different things. I'm not going to go into too much detail about that because it is secret stuff, but you are going to get better platform. I understand you guys. Match trader is nicely. It is not very good. So, and we know it. Okay, we know it's very basic, and we want you guys to have the best. We're working on it. What else? Victor, do you want to just go into the Discord and check my question, because he's gone and he's using the Discord. People in the Discord get priority, so we're going to go and have a look and check that question out.
I will check the question in Discord. Let's have a look.
Different IP in the 5ers allowed, I think so. Look, as long as I have different IPs. If I go to trade in the trading room from home or I come to the office, it's very normal. But if you're trading all the time on your computer from the UK and then suddenly you're trading from your computer in, don't know, another place in the other side of the world, Antarctica, then obviously that's going to be a little bit funny and you may get asked about it. But as long as you're not doing any kind of exploits, then you're totally fine. You got nothing to worry about. We know everybody in places like Vietnam and things like that, they have VPNs, and obviously the IPs change a lot. We've got ways of seeing if you're an honest trader, if you're not an honest trader, so don't worry about that. How to get involved in the giveaway? Go into the pinned comments and enter in the code 123456, and you'll be entered in. We'll be doing the giveaway in a couple of minutes. Still don't find that Discord? Go into your Discord hub. Go into the 5ers hub. You'll see on the right-hand corner the Discord logo. Click on there, and that is it. Yeah, VPS, everything is allowed. Don't worry about it. Why does Victor wear a mask? He is running from the IRS, but he's not even in America. So, Now, Victor, you can say this. Maybe you want to. He's not actually running from the IRS.
But I am.
There you go. No, a double whammy.
No, actually, it's not the IRS. It's the FBI. No, not FBI. I'm gonna get in trouble mentioning all the 3-letter words. No. I have a very special edge in the market, and the mask helps me to execute on my edge.
The power of the mask.
No, it doesn't. No, it doesn't. That's another thing that doesn't is not true. Anyways, but this is the the mask is, sometimes I say the mask is the source of my superpowers. I would like to think that. That's why I called myself the mask trader.
Love it. I love it. What's the withdrawal methods? You got crypto, you've got bank transfer, you've got crypto and bank transfer, or you've got the 5ers Visa card, which if you go to the start of this video, you're going to see us doing a withdrawal from the profits of the trading room into the 5ers card. We're going to put up some tutorials how to use that as well in a separate video that will be on YouTube. That's it. 5ers card you can use all around the world. You can get a physical card if you want. You can withdraw from an ATM. You can open up many different cards for your friends, for your family, whatever you want to do. If you want to, it's an absolute amazing bit of innovation that we've brought to the industry. So what is the code? The code is 123456. Victor.
All right.
Victor.
Yes.
Let's go. Let's do the challenge. How do I get it, Alex? So once you have passed, once you've got some profits, obviously you have to be within the withdrawal time, which is 14 days, minimum of 150. Then you press withdraw. Literally go to the start of this live. You will literally see how it's done, but you have to be funded and you've had to have a withdrawal to be able to do that. Once you're funded and you've made the withdrawal, our accounting team will send you a link for registration. There you will get a user, there you will get a password, and that's how you log into your dashboard. Once you log into your dashboard, you will have your card. You'll be able to make a new card. You'll be able to make many different cards. These are virtual cards that you can put on your phone at any time, or you can order the physical card to your home address. Once you do that, then you'll be able to withdraw from ATMs. You'll be able to do everything that a card does, so that's it.
Someone asked if the usage of the 5ers card is legal in certain countries. The card, guys, is a Visa card. Wherever Visa card is legal, which is I think every country in the world, you can use it, right? So the card has nothing to do with Forex, right? It's a regular virtual Visa card. So if you can use Visa in your country, then you can use this card.
Yep. Well said, sir. Well said. Love it.
Yeah.
Hold on, I'm just having a bit of an issue. Let me just.
Did you mention the Discord link? Someone asked about the Discord link. Did you mention?
Secret one.
I'm not sure, but
no, it's in the hub.
Yeah, the dashboard. And once you're a client, when you bought an account with the 5ers with our prop firm, you will have your personal space, which is the dashboard where you will see your accounts. There you will be on the right upper corner. There will be that little symbol, that little icon for Discord. You click on that, and that's the link that that will take you to Discord. It will be Discord will pop up, and you will be prompted to accept the invitation and join the server. You can only join the server by having an active account, right? So you have to be part of the group, part of the gang, for you to be able to enter the server. All right, let's see, what else do we have?
Give me 2 minutes. Sorry, guys.
It's
long.
It's a great place. The Discord, unlike well, I don't want to mention others, but I have experience with other Discord servers, and this is completely different. This is complete. We have we thrive. We have as a goal to have a a very welcoming vibe in our Discord group. It's really it's the best. I think it really is. I
Yeah.
see how many traders that they come to us later after a certain moment being there, telling us, you know what, my trading has improved a lot since I'm part of this server. This is
The Discord has
actual
many, just
comments.
to jump into there, because Victor's not gonna blow his own horn. Victor, Jonathan, many other people that are in the Discord, always giving the most insane value, all for free. They are literally there because they care about the community. Victor started out as a 5ers. Victor then became a mod because he was always active and always helping. We actually brought him to do some challenges with Traderlicious, and he won those challenges. And then I decided, to reach out to see if he wanted to come and do some stuff for the live trading room. And Victor is always in there giving value after value, helping traders. And so many traders have got so much knowledge from it. We're starting to see traders get better and better and better. And it is a community that is there to help each other. It's not a community where it's all about support. We've got a dedicated channel just for support. The rest of it is how you communicate with other traders, how you get better as a trader. And we give you all the support to do that with all the workshops that Victor, Jonathan, sometimes I come in on Fridays and we do open sessions where you've got 4 or 5 people all with their open charts. Everybody's trading at the same time. Everybody's talking. I have never seen a Discord community that is like that, where you've got real traders in real time, all of them trading with their open screens. Everybody can see their positions. Everybody can see the volume of their positions. It is a really good place to be. So definitely, I'm going to pull up the giveaway.
Actually, the today after the YouTube session, I will have a workshop. So half an hour, more or less half an hour after this show, I will hop on the Discord server and I will keep on talking and explaining different concepts, everything for the growth of the traders. And it's at no extra cost. It's free to you for everyone who is part of the server. There we go. We have the winners.
Okay, we got Johnny C. We got Ratchet. We've got Twine. We got this other guy. Can't pronounce his name. We've got Maya, we've got Mike, and we've got Alan. So you guys, you are the lucky guys. You're going to get an email from me very shortly with a link. That link is a coupon. That coupon's going to allow you to complete and get the Bootcamp account. Now, use that Bootcamp account as what you will. Use it for a training ground. Use it to pass it and get funded, and use those funds to get more bigger accounts. But please don't take it for granted. And that's it.
Congratulations, everyone who won that account. Make good use of it. It can be that first step towards your goal, financial freedom.
We all literally start from somewhere, and sometimes it's just a little bit of a basic practice, a goal. Sometimes when you haven't got a goal in your trading as well, it can be quite difficult. When you've got a goal, you've got to make 6% or 10%, and there's no time limit. You just take your time and you get there, slowly picking away. Eventually, you'll get better and better over time. But anyway, Jonathan will be with us tomorrow. Victor, of course, will be with us as well. He's a permanent member of the team now. Woo woo! Everybody that loves Victor's content and Victor being here, put a W in the chat, because that is super important, just to make sure that we pick the right guy. I know we have, because he is an absolute fantastic part of the team.
Yeah, I'm happy to be part of the team.
Maybe.
I'm happy to be part of the team. I'm passionate about trading. I like sharing because I know how hard it is to be a trader, to get consistency. It's difficult. Let me tell you, it is very, very difficult. So I know what it takes, and I'm happy to give back to others who are in the same process, in the same boat, that are perhaps in another level. Even if you're above me or if you're still at the beginning, it doesn't matter. You need other people. It's the journey gets much easier when you have other people showing you the way, showing you how they do it, and you don't have to copy them, but just knowing and seeing how they trade. And that is what I bring to the table. I can show you how I trade, how I approach the market. And even if you don't agree with me 100%, it doesn't matter. By showing you, by letting you see how I trade, you might learn a thing or two. And I'm sure it can be very beneficial for a lot, actually everyone. We can all learn from each other. And so I'm happy to be in here, and thank you all for those W's. I see them in the chat, a lot of them. Thank you, I appreciate that. Thank you very much.
Yep. And for the guy telling me to close Euro, I understand why you'd want me to close Euro. But I'm going to set and forget this one. All right, guys, we'll see you tomorrow. Thank you very much for being here. Okay.
Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content